Hello everyone. Welcome to our guide to understand the differences between US GAAP and Indian accounting standards. But before we move on to understand these differences, let's first see what US GAAP and Indian accounting standards are. So all companies across the globe are required to prepare financial statements according to the accounting standards prevailing in a specific country. It is to be seen that not all countries follow the same accounting standards. So these companies have to follow the accounting standards which are there in their respective countries where they are situated in. They may vary from country to country. These accounting standards ensure consistency and transparency and also help in preventing misrepresentation and fraud. So say for example, in US, the accounting standard that is followed is US GAAP. Similarly, in India, the accounting standard is Indian accounting standard. In a similar manner, Europe, all the countries follow different accounting standards. So ultimately, it depends on where you're situated, and through this, you determine which accounting standard you're going to follow. For the sake of this video, we are going to limit ourselves to US GAAP and Indian accounting standard. If we talk about US GAAP, it is a comprehensive set of accounting standards, procedures, and rules prescribed for public as well as private companies in the United States. These standards are developed by Financial Accounting Standards Board in the US. If we talk about the Indian accounting standards, they are issued by the central government under the supervision of Accounting Standards Board and also under the supervision of Indian Institute of Chartered Accountants. So these are the bodies that develop the Indian accounting standards in general. If we talk about the differences between these financial standards, they can be divided into certain points. The first one is based on principle of conservatism. Now, under the US GAAP, principle of conservatism is not followed. Whereas under Indian accounting standard, the financial statements are prepared according to the principle of conservatism. The principle is very simple. It states that all possible losses should be recorded in the financial statement. Let us explain this through an example. Assume that one corporation called Blue Corporation sues another corporation called Max Corporation for patent infringement. Now, in this whole scenario, there are two situations. First one, the Blue Corporation can win the patent infringement suit or it can lose the patent infringement suit. If it wins the suit, ultimately it will record the gains in the balance sheets or in the books of accounts. However, if it loses the suit, if it records the losses in the books of accounts, in that case, they will be done using the principle of conservatism. However, by not recording the losses in the books of account will mean that the principle of conservatism is not followed. It is ideal that these losses are also recorded because it lets users know that the company at a later stage is required to pay a huge sum of account and generally keeps everyone informed. The second difference comes in the form of manner in which financial statements are to be prepared. For example, under Indian accounting standards, the format of financial statement should be as prescribed by the Schedule 3 of Companies Act 2013. So Schedule 3 of the Companies Act lays down general instructions that companies must follow while preparing balance sheet and profit and loss statement, etc. The schedule also talks about pro forma for a balance sheet. In contrast to this, under the US GAAP, companies have to record items in their balance sheet in a decreasing order of liquidity. So now order of liquidity means presentation of assets in the books of account in order of time, amount of time that it will take them to be liquidated or be converted into cash. So the assets which will be liquidated earlier will be at the top and the assets which will take highest amount of time to be liquidated will be at the bottom. If we give an example, cash and cash equivalents will be recorded first, followed by marketable securities, then account receivables, then inventories, and so on. Next difference comes in the form of valuation of investments. So Indian accounting standards required current investment to be carried at lower cost or fair value. On the other hand, it requires long-term investments to be valued at cost. In contrast to this, US GAAP allows and in some cases requires long-term investments to be recorded at market value. So for example, Blue Corporation brought an inventory for $300,000 in financial year, say 2023. As per the Indian accounting standard, the inventory will be recorded in the financial statement at cost or fair market value, whichever is lower. While on the other hand, in US GAAP, it will be recorded in the financial statement at market value. And that is whatever value will be there at the time of preparation of the financial statement. Under the Indian accounting standards, the consolidation of subsidiaries account is not mandatory. However, if the parent company decides to consolidate the accounts, Accounting Standard 21 has to be followed to do this. Accounting Standard 21 simply states or gives consolidated financial statements and rules and principles that have to be followed while doing this. On the other hand, when we talk about US GAAP, the consolidation of accounts of subsidiaries is mandatory. So, say for example, a company has four subsidiaries. If we apply the Indian accounting standards, it is not mandatory to consolidate the financial statements of these subsidiaries. However, under Indian accounting standard, if it is decided to consolidate the financial statement, accounting standard 21 has to be followed. On the other hand, in the similar situation, US GAAP mandates that consolidated financial statements are prepared. Difference comes in the form of goodwill impairment. So when we talk about Indian accounting standard, a one-step impairment model is used. On the other hand, under the US GAAP, a two-step impairment model is used. For example, if the value of goodwill is $20,000, then as per Indian accounting standards, it is capitalized and charged to earning over a period of 5 to 10 years. On the other hand, under the US GAAP, first, the fair value of the goodwill will be estimated to check whether it is impaired or not. And second, the second step will be to measure the amount of impairment. When it comes to revenue recognition under both US GAAP as well as under Indian accounting standard, a five-factor model is used to govern revenue recognition. These five steps include first identify the contract, then separate performance obligations, then determine the transaction price, allocate the transaction price, recognize the revenue, etc. However, there's a slight difference between the two. In US GAAP, more emphasis is laid on transfer of control. On the other hand, under the Indian accounting standard, more emphasis is placed on risk and reward. For example, Blue Corporation releases a new version of software in January 2024. They price it at $10,000. Now, one customer called A bought this software, new version of software within the first month for $10,000. Once this software is bought, Blue Corporation can decide to recognize this revenue and record it in the books of accounts. However, if we talk about the US GAAP, this will happen because transfer of control has happened. If we talk about the Indian accounting standard, the revenue will be recognized because the risk and reward of ownership has been transferred in this scenario. When we talk about plant, property, and equipment, historical cost principle is followed for both US GAAP and Indian accounting standard. However, under the Indian accounting standards, re-evaluation is allowed, while under the US GAAP, re-evaluation is not allowed. For instance, in May 2017, Blue Corporation owned some plant, property, and equipment with a gross value of $500,000. Accumulated depreciation for the same was $200,000. Now, due to wear and tear of the machinery, the company decided to purchase another machinery. For this period, the depreciation expense for all old and new machinery was $150. In this whole situation, as per the Indian accounting standard, the plant, property and equipment will be calculated on the re-evaluated amount. On the other hand, under the US GAAP, the re-evaluation cannot be done. When it comes to intangible assets, under the Indian accounting standards, intangible assets are amortized over their useful life with a presumption of not exceeding 10 years. On the other hand, when we talk about US GAAP, the intangible assets with limited useful life are generally amortized. However, the intangible assets who have indefinite useful life are not amortized. Rather, they are reviewed at least annually for impairment. For example, trademark or goodwill who have unlimited useful life. Under the US accounting standard, because these assets, intangible assets, have unlimited useful life, they will not be amortized unless their useful life can be determined to a fixed period. With this, we understand the key differences between US GAAP and Indian accounting standards. Now, it is up to the companies that are situated in these two countries to ultimately follow the rules, standards, and procedures prescribed by each of these accounting standards, and finally prepare their statements.